Good morning, traders. It is Wednesday, May 18th. I'm sorry I haven't been able to get my videos out. I've been super busy and I have some exciting news for you. Been working really hard to get my new website launched. Please come take a look at the website. You don't have to buy anything. I'm going to teach you our system. I'm going to show you why it works, and I'm going to show you how we trade it. You don't have to pay a penny. www.oneoption.com. You'll see the link in the description area of this video. I'll also post it in my comments. If you like what you see, go through the process, learn the system, take the free trial. So let's go take a look at my last video. It was on Thursday, I believe. So SI was a short that I really liked. The market had been falling apart. I felt that we still had downside to the market. Lots of market analysis coming up, so stay tuned. Stock, this is about where the video came out. Stock was at about $67 or so when it was posted, so there was plenty of room to make money on it on a day trading basis. I've been trying to give you some swing trades too that you can hold overnight, maybe hold for a couple of days. The market has been so dang volatile that swing trading has been super difficult. You can see how the next day all of the crypto stocks took off from deeply oversold conditions. So did the market. This is a daily chart of the S&P 500, and you can see what's happened since that video. Big market bounce. We're going to get to the market in a minute. So let's take a look at SI. Gee, Pete, I got into this trade on a swing trading basis. What should I do with it? Well, you have a major horizontal support level here, which is now resistance. And you can see how the stock has broken down below that horizontal support. Now that is a resistance level. It comes into play around $85 or so. That's where I'd have my stop. I still believe that this stock is very weak. You can see, yes, it's bounced with the market, but not to the extent that the market has. Well, how do I know that? Well, you can see there's a bullish hammer for the S&P 500. This little chart popping out on the right side. This is the SPY on a daily basis. You can see how the market has been able to rally substantially. This stock has not been able to get through that relative high. So again, that $85 level is where you would have your stop if you had a longer term swing trade on. I still believe that the market has another leg lower. If it does, this stock is going to participate on the downside. So I still like SI as a swing short, but when you're shorting this market, you've got to be prepared for these snap back rallies. They can come at any time. So I'm going to be looking for another swing short. The synopsis on the trade is that yes, on a day trading basis, it performed well. On a swing trading basis, not so much. We'll see. The market has another leg lower. I think it's going to work out. So let's take a look at the market. What the heck is going on with this market? You can see heavy, heavy selling, and the market doesn't go straight up or straight down. And you can see we had heavy selling in here. Uh-oh, looks horrible. And then we get these sharp, violent snapback rallies. You don't know when they're going to come. Now, a long green candle off of a gap down like that suggests you're going to see a little bit of follow through, but here come the sellers again. Now we have a downward sloping trend line on D1. Yeah, we get a nice little breakout to the upside. You have some short covering in here. But then, as soon as that momentum wanes, that 100-day moving average provides resistance. So does the 200-day moving average, 50-day moving average. Okay, now we've broken back down, upward sloping trend line, violated to the downside. See you later. Oh, here we go. Huge sell-off here. There's your bounce. So you've got to be very careful. The way that you need to approach the market, in my opinion, for the next 3 months or so, is that if you get one of these big drops like this, you've got to be ready to take profits on your short positions. Wait for that bounce, wait for it to stall, Start looking for stocks with relative weakness, reload, wait for the next leg lower. You don't have to wait for these bounces. If you get a big, deep trough, that's where you should be taking profits on shorts. And you tend to get these big sell-offs and these big bounces on the short side. You don't see that as much on the long side. It tends to be a grind, grind, grind higher on the long side. But when the market is trending lower, you hit these air pockets just like this one. And so when you get these long red candles stacked and you get tails under body and a bullish hammer, you got to be taking profits in here because buyers are coming back in. Let the market release, let it show you that that resistance is building, wait for a little breakdown. Okay, this is where I can re-enter my short positions. Another big deep sell-off. Take your gains. Wait for that release. Take your gains. Wait for that release. Get short. I'd be taking gains in here. Now you keep bouncing. Now you can reload when you start breaking that horizontal support. Get that big trough. Take profits. So here we go. We've got another little bounce. I'd mentioned to you on SI that we had horizontal resistance that the market was going to try and move through. Actually, that the stock was going to try and move through that $85 horizontal support level on SI. Well, on the market, you also have a similar horizontal support level, and it comes into play right around this 412 level. I believe that this is where sellers are going to look to reload. So, Pete, why are you so bearish on the market? Well, I don't really have to do anything more than just look at the charts. The charts are telling me that money is going out of the market. This has been some heavy selling that we've seen since January. So I believe that's going to continue. The Fed right now is talking about a 50 basis point rate hike in June. That's coming up in a few weeks. Talking about another 50 basis point rate hike in July. Whoa, that's an additional point. Fed is very concerned about inflation. We've had a lot of Fed speak this week. Jerome Powell has reiterated as much. He has said that he feels that the employment situation is pretty dang good because there's still a lot of job openings. So he's not overly worried that these interest rate hikes are going to cause a recession. Well, they've gotten everything wrong to this point. Why should we believe that? I know that interest rates are going higher. I know that inflation is running rampant. I believe that the UK just posted inflation at 9%, 40-year high. I mean, this is common around the globe. You've got China has been shut down. Their retail sales were down 11%. Typically, China is showing double-digit retail sales growth. They have been for decades. I haven't seen a number this week, even since the onset of COVID-19 a couple of years ago. So they're really hurting right now. Their smartphone shipments last month down 40%. There are going to be supply disruptions. No question about it. So the market has not found that low. Interest rates are going to be raised progressively, and analysts don't know what economic impact this is going to have, and they won't know that until probably September, maybe October. Then the dust will settle and they'll be able to determine, hey, economic activity is still good. The market shouldered the interest rate hike. Okay, now we can come in and buy. There is, incidentally, a ton of cash on the sidelines. We've printed about $10 trillion in the last 3 years, so there is plenty of cash sloshing around right now. So we are going to see these violent snapback rallies. Stock valuations are still pretty high, so don't look at a chart and think, oh my gosh, look at how low Microsoft is. It can't go any lower. Apple can't go any lower. Look at the forward PE ratios on those stocks. They are historically high. So yes, they can go lower. So I don't feel we're going to have a substantial market rally until we hit an air pocket low. I don't know where that air pocket low will be. I only know that it looks something like this, where you have these stacked red candles. And then you get this gigantic low, this gut-wrenching, oh my God, low. And once that low is established, the buying is relentless and you never look back. So you just keep seeing, okay, bullish hammer, long green candle, long green candle, long green candle. Then you know that you've got a longer term low that has been put in. Until then, you have to expect that the market's going to continue to sell off, bounce back, sell off, bounce back. As I mentioned earlier, the tactic is take profits on these deep troughs, wait for the bounce, identify relative weakness, reload, repeat. So let's go out, let's find a short that we like, and let's set up some market parameters. So the first market parameter that I'm going to set up for you, very, very important, market first, market first. So we had a little bit of a resistance level right here, and you can see that the open was around the 405 level. And I believe we're going to open below 405 today or around that level. So first thing, we want to be below the low from yesterday on the SPY. That low was at 402.58. So first condition for this trade, SPY must be below 402.50. Let's round it off. Has to be below 402.50. Or you don't do the trade. We need to know that the market is at very least able to take out that prior day low. Then it has a chance to continue to drift lower. So I'm not going to mention this condition again. 402.50 is your number. Market has to be below that level. Then we're going to be taking a look at some shorts. Well, what could I possibly want to short right now? What would be a good setup for me? Well, how about a stock that has recently released earnings? And I'm going to use the custom search engine. Yes, we can search for companies that have recently released earnings. So from May 2nd to May 18th, so roughly in the last 2 weeks, these companies have released earnings. We're also going to be looking for relative weakness on a daily, 4-hour, 2-hour basis. So the stock is not strong relative to the market. It is weak relative to the market. I also have the 15-minute weak relative to the market box marked, and I'm going to show you why in just a second. And then finally, I'd like to have some decent option liquidity. So let me move this off screen. Why would I want that weak relative to the market on a 15-minute basis? Well, look what the market did heading into the close yesterday. Rally, 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 rally. I want a stock where sellers have been pounding that thing like whack-a-mole, not letting it get off the deck. That tells me they want out of that stock. They don't care that there's a temporary little bounce in the market. They want to sell their shares. That's what that tells me. That's why this system works. So that's why that's an important variable for us to use. So we're going to go into this chart and I'm going to bring it back one more time. And you can see we don't have 50 candidates to go through. We only have a few. So I'm going to flip through these pretty quickly. I can't spend much more time or I won't get the video out before the open. So first one, Airbnb. I like it. I think this is going to be a good short. Let's put up the major moving averages. Let's take a look at that 15-minute chart, by the way. Look what the stock did. Look what the market did on a 15-minute chart. Rally, rally, rally into the close. Look what this stock did. Couldn't even get to the high of the day. I think Airbnb is going to be our pick of the day. How would I approach this, Pete? How would I set this trade up? Well, we can do something as easy as a 15-minute chart. We're going to go in, we're going to set a GTC alert. We're going to click on a low here, and we'll click on a low here. Now we've got our upward sloping trend line. It happens to coincide with the low of the day from Tuesday. Okay, if it can get below the support level, that would be pretty significant. Go into a daily chart, see if we got anything working there. probably pretty similar upward sloping trend line. 1, 2, 3, 4 touches. That looks pretty good. So that's what we're going to do. If Airbnb is able to trade below the low from Tuesday, hover over, the low was 115.17. So Airbnb below 115, SPY below 402.50, we are taking a short position. This is a day trading position. If we start to see accelerated market momentum, the market closes on its low Wednesday, we can expect some follow through selling and you can hold some of it overnight. But for right now, you've got to keep your trades very, very short term because we're getting these violent moves back and forth. So yes, we got our little bounce. If that low is taken out, we're probably going to roll over again. I think Airbnb works maybe for a few days if the market can close on its low of the day. So that's going to be your pick of the day, but I'm going to go through a couple others. I'm just going to click through the list real quick. I'm going to stay on that daily chart and we'll knock through these. That had a nice bounce after earnings. You can see there. So wouldn't be a favorite short, but I would put a GTC alert right there. If it breaks that support, probably going to be a good short. Nice little bounce there. I'm just going through all of these charts here. Look at how that stock could not get off the deck with that market rally. This is what we want to be watching for. 10 SI, put that indicator up below zero, relative weakness. Earnings there, they hate it. They can't stand the stock. This piece of trash, I want to unload as many shares as I can. That's the mentality that these stockholders have. They hated that number. Sell, 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 sell. Any bid, sell, sell, sell. Oh my gosh, the market's up. There might be some natural buying in it just because it could be included in some baskets if it were a larger stock. Sell, sell, sell. I don't care why. Just get me out. That's what relative weakness tells us. Another right there. Earnings crushed. Oh, Pete, I can't sell this stock. Look, it's so low. Well, this tells me it's going lower. Here you've got a nice upward sloping trend line. So when I see these, I take 2 seconds and I drop that line. That would be a significant trend line breach. EXPE, horizontal support right through here. Beautiful breakdown, nice follow through. EXPE looks terrible. So another nasty little chart there. You can see earnings before the open yesterday. Home Depot reversed, closed lower than the high. Yes, could be fairly weak. It'd have to get through this horizontal support. You don't have a lot of downside because of that support level. So I'm going to just keep clicking through. MGM, there's your earnings. Can't get off the deck. You can see that there's a little bit of a theme here that the travel stocks are not doing well. MTCH. And finally, Toast. Toast is another one where you can see earnings after the close. Stock rallies up. Hey, everybody loves it. No, stock gives back those gains. It has been drifting lower the last few days when the market has been going higher. That tells me that Toast is toast. It's going lower. Heavy volume. Toast is another one you can look at. Airbnb, ABNB. That is your short pick of the day. Be really careful out there, folks. We still have some very dark clouds looming right now. China's still trying to get through COVID. I believe as of last week, there were about 340 container ships outside of Shanghai. Supply disruptions are going to be an issue. We've got drought in a lot of places globally. That's going to mean that crop prices are going to continue to go higher. Energy prices are still elevated. The Fed is raising rates. Inflation is running rampant. So there are enough reasons for asset managers to not want to be in the market right now, to not want to buy. So, yes, we're going to get these little bounces. Those play into our favor. We just have to wait for them to stall. And then when the market starts to head back down, we could take short positions with the intent of taking profits on those deep troughs. That's your game plan. Please make sure to come and visit my website. You are going to learn so much about the system that we trade, and it won't cost you a penny. Good luck with your trades. We'll see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.